are, and believe me, I am jacked. So it's not me. It could be internet. I am having bad weather here. So let me know if you're having trouble hearing me. Just if you're having trouble, put yes. If not, no. I want to know if it's a few people that are isolated or if it's just me. Okay, sound is good. All right. Some static for a few seconds. That's got to be go to meeting. But here's what I'm going to do. Let's take a 10-minute. I'll put the little clock up. No, I'm not going to do it. I'm not going to reboot. It's working. I'm not going to do it because it could get worse. Okay. All right, man. This is a good place to break. Let's do that. We'll finish the test questions when we come back. You want me to move to California? All right, let's see. Can't do it with the pen. Hate that. All right. Countdown. Let's do 9 minutes, 30 seconds because I've been talking for half a minute. Set, go. I'll see you guys in 9 minutes, okay? All right, I am back. Everybody good? Okay, hope you can hear me. All right, good stuff. All right, so what time should the red box appear? The red box should start the U.S. session, so 9:30 to about noon. And the red box should help you look for the U.S. reversal setup. You might have one leg before the box and one leg in the box for a second formation of a W reversal type of thing. Don't let the box deter you. If stuff messes you up, take them off the charts. I'm not offended. All right. What time should, what trade sets up in the shadow? What time is ideal? Okay, 2 times. 2 types of, same trade, 2 different times during the course of the day. Brinks, 3:30 to 3:45 candle. The actual time is 3:45. And then 9:45 from the U.S. session. Okay. Just for clarity, Jim Nordstrom brought this up, and I wanted to clear it up, is that the winter time, the gap is from 2 to 2:30, and the session starts at 2:30. So that candle would be 2:45 in the winter, which is now. Sorry. All right. The U.S. time does not change. When we change our clock, we still have the equities open at 9:30. So there's an hour longer of London, and that's sometimes why you might get a little extra consolidation in there, because they're not going to, the guys that ain't getting up at 8:30 for you because the clock's changed, or 10:30. It's 9:30. That time stays unchanged. They don't adjust for daylight savings, all right? Next question was, where's the entry on that Euro chart? The entry is at the completion of the second railroad track red to the downside. The entry is right there. And if your stop, this was only 2 pips from that pin to that top. So if your stop was where it goes, you were safe. And if you got a good fill and you didn't get slipped too bad, you just nipped your 50. Okay? All right. I think I answered everything. Any questions about the quizzes? You guys should have this. 3:45 a.m., Tony, is the Brinks candle. That is the candle that forms the high of the day at that time into the session. That's a solid gold trade. Back it up. If all the other things are present, that's solid gold. All right. Label this chart. Okay. Take a picture of it, label it, and we'll look at it together. But I'm going to give you, I don't know, take a picture of it, open up in Paint, start marking some things on there and write them down. And then we'll look at it together, okay? Is it big enough? It's full screen, right? Okay, it is 7:14. I will shut my mouth till 7:20. 5 minutes, 6 minutes, something like that? Okay, go. I'm here. You're quizzing the chart. I didn't go anywhere. Okay, you guys done? Another minute. All right, ready? Close enough to 720? I can't stand it. I'm sitting here going crazy. I can't be quiet. You know I can't. No problem, Alan. Just we're taking a quiz. Just chill, and you'll get caught back up. All right. See if you got these markings. All right. I'll try to go through it slow, but I'm on my fourth Diet Coke this morning, trying to get my sinuses to straighten out. All right. Some of you just figured out how to copy and print. Hey, that's a good start, man. That's a great advancement. All right. What do you got? Sunday, right? Remember the psychological support and resistance? The first 8 hours, I'm sorry, the first two bars, two 4-hour bars, first 8 hours of the week is the psychological support and resistance zone, all right? The dealer breaks high, traps long, pulls back short, false move, weak beginning. Trapped high, went short, trapped short, okay? 1, 2, 3, intraday to the low. See it? Yes, the first two bars on the first two bars on the chart, but it would be 8 bars here. This is not a 4-hour chart. Sorry, it would be 1, 2, 3, 4, 5, 6, 7, 8. It would be 8 hours. You're right. You guys got me on that deal. Love you guys. You're sharp. You ain't missing nothing. Okay, 1, 2, 3 to the low. False move week beginning. Midweek reversal came early. Came on Tuesday. Right? Level 1 rise. Level 2 rise. Level 3 rise. Okay, now, Steve, that looks like 2 days. Yeah, it is 2 days. But the dealer repeats the level on Wednesday and Thursday. Okay, so he hits it high, goes into consolidation as a half a Batman, comes back and hammers the top, right? He hammers the top side, hits the stops one more time. That's your entry. That's a multi-session M formation where the dealer violates the high and falls back below. I would have missed that because I don't trade in the blue box. I'm usually at the Cheesecake Factory. All right? Now what do you got? Peak formation low, a unidirectional swing away from peak for 2 to 3 days, or 3 levels of rise. Okay? There will be a midweek reversal. I can't tell you when the midweek reversal is going to come in, but I can tell you that it's called a midweek reversal for a reason, usually around the middle of the week. All right? So it could be Tuesday, it could be Wednesday, could be Thursday, and then go into Friday. He could start it on Wednesday, and then in the Asian session, repeat the level, which becomes technically early Thursday morning, right? But, I mean, to me, this is Wednesday. He made the high, spiked it, and started to correct against it. And then what do you got right there? Peak formation high, right? Peak formation high. Drop into consolidation. What does the dealer issue? Attaboy, safety trade. Safety trade. Visible stop hunt above the Asian numbers, M formation. Bam, got you. And then look, little to no net change for the course of the week. Now, one of two things is going on here on this leg. What do you got? You got a possible multi-session trade setting up. I'm a terrible drawer, by the way. Possible multi-session second leg. We have to see what he does going into the next night. But now we know that our peak formation is here, right? So we expect one more push down and then end the week Friday back into consolidation. All right? But the best trade is what? Identifying yellow W, low of the week. Notice something very important is that he stayed off of the 200. Why would he do that? He's protecting against the block of orders that may or may not be there. I don't know if they're there. But the fact that he put on a brick wall for 3 hours and moved away from there tells me that there's probably some block of orders that he doesn't want to absorb or to trigger, right? He doesn't really give you a safety trade, but this could be a quasi. There's 2 pins to the downside, W. That looks pretty good. This whole mess is probably a news release. Consolidation area into the U.S. session, ends the day off of the high, and then starts the cycle over. Shifts up, sideways, hit the stops in both directions, breakout traders. Pins to the downside, W formation. There's a hammer, long. Pin switch to the top. When the pin bar switched to the top side after a couple of days of rise, change your thinking. Dealer's trapping high. Picture the hand grabbing and pulling back. Picture the hand grabbing and pulling back. The dealer is trapping high. Okay? Look at this picture of this structure, and then look at yesterday's euro. They're not that much different. It's the same principle. Price doesn't stop like a brick wall's there until the dealer stops it. As soon as you realize the dealer stops rising like a brick wall, something's up. Something's going on. And the dealer's responsible for that. Okay, see, a brick wall is in place. How does that happen? All right? Those are the things you're looking for. Peak formation high, you got the LOW, low of the week. I hope you marked all this stuff. Low of the week. I'm sorry that erased. Low of the week, high of the week. You have 3 levels over 2 days. Right? 1, 1, 2, 3. 3 levels over 2 days. That's an example of between the 2 and 5 day. And I showed you an example where he holds it for 2 days and then rises 2 more days, and that was a 5-day cycle. Okay? False move week beginning, pushes down in three swipes, right? Isn't this, if I took these lines off, this is the same thing. I would show you this pattern, and you would be like, wow, same as intraday. Okay? Phil, I don't know what you're talking about. Take a picture and send it to me, and I'll look at it for you. All right. Okay, we'll quiz these charts after we talk about candle patterns and structures and stuff, okay? All right. Hopefully you guys are doing well. Let's close this. Hopefully you have all these questions answered on your quiz, and you should know these things. Start to internalize them. They should be second nature. All right, let me get a good section going. How did that happen? All right, we're going to talk about the trend, how the dealer trend works, how to label it, what to expect. All right, I want to. I think I got 2 slideshows going. That's kind of bad. All right, give me a second. I'm having a little technical difficulties here. All right, am I still here? That was bad. Okay, my PowerPoint's frozen. I'm going to try to shut it down without losing you guys. Okay. All right, reopen. I'm still good. As long as you can hear me, we're still hanging. Okay, thanks. Maybe it is me. All right, let's talk about the dealer trend as soon as I find the slides. I'm trying to pull the slide. It should have a blue screen right now, but not for long. Okay, so we have the trading zone. You understand how it's set by the numbers, okay? So the next thing to talk about is the dealer trend. All right, we'll talk about that for half hour. We'll do the break. We'll cover a few things. I'll probably turn it over to Jim for a little while. And then we'll roll from there, okay? See what time it is, see how we feel, what's going on. Okay, so the trend. Good job, Dave. All right, how do you identify the trend? Part of this is identifying the peak formations, but you got to understand there's 2 types of trends. There's the market maker trend, which is the real trend cycle. And then there's a technical trend, what the rest of the world sees. Understand that these 2 will be in sync for a day or 2. Why is that? The 2 have to meet in order to keep you in the game. If you lost every time you pulled the trigger, if you got in and the dealer just goes, boom, gotcha, you're out. You wouldn't stay in the business. There would be no business. Think about how you've been close and you've said, man, this time I'm going to keep my discipline. I'm going to do this. I'm going to do that. I'm going to do it better. And you put more money in the account. If the dealer crushed you from the beginning, there would be no business. They know this. They have to keep you enticed by allowing you to win. And that happens by them validating the technicals a couple times during the week. So the trend is set by the market maker and can be reversed at any time. Understanding that should give you the edge and allow you to trade both ways without fear, except where? Level 1. Okay? Don't become so biased that you miss the setups. Don't be so locked in that when the dealer does a rise over 2 days that you're like, no, it's going up today. And he throws 15 pins to the top side and you're sitting there going, nope, I got to wait. It's going long. Don't do those things to yourself. That's what the problem is with a bias. And that's why I don't like putting the bias out there. If you know where the peak formation is, and you might see 2 levels or 3 levels over 2 days, you don't know if the dealer is going to give you a reset or correct. So if he issues pins to the top side and throws one of those brick wall patterns at you to the top side when the price has been rising for only 2 days, and you're like, nope, Steve said 3 days, it's 3 days, I'm taking 3 days. You're missing the setup and the opportunity. The behavior is not the bias. The behavior is what the dealer does to trap traders. So if he does what you see as 2 levels over 2 days, and you're locked in on going long, and the dealer issues three hits to the top side like a brick wall and then falls, and you missed it, that's what locking your mindset into a bias does to you, okay? Trade both ways except in level 1. The only direction coming out of level 1 is in line with the peak, away from peak. If the peak formation is low, then level 1 is a long issue. If the peak formation is high, then level 1 is a short issue. Nothing else. And if that doesn't show, you pass. If the dealer breaks to the downside and makes a W, you know if he's going to continue to rise until he gets back to the top side of level 3 and then makes the fall from there. That would be a 22 or a multi-session MW formation. Understand? There is no trade coming out of level 1 if it's back towards the peak. Yes, trade both ways except in level 1. Thank you. Well said. I'm glad you said that. The trend is generally set up as a 3-day cycle. Now, I know there's variations on the theme, and that's why we need each other. I need to show you the variations, and you need to learn them. All right? Day 1 is known as reversal day or peak formation high or low. What happens is price has been moving a certain way. In this example, down. So I always say up. But when I reverse, I guess it will be back up. Price has been moving down for a couple of days, 2 days maybe, 3 days, 3 pushes, 3 swipes, first part of the week. The dealer puts in level 3 activity. He chops, look at Euro from Friday to Monday. He uses a gap as one of his tools, and he forms a perfect W formation. The rest of the world is seeing short Euro on their charts, but the dealer has applied the brakes and gapped. This comes as a market surprise because everybody was built short, built into the market short, but the dealer has purchased those shorts from them. He catches everyone following trend and traditional indicators off guard going the wrong way, mostly the retail traders. The news may be used to perpetuate the false trend. Non-farm comes out, and it happens to be that he made the cycle going into Friday, consolidates on Thursday, uses the news to hit the stops high in reverse. Catches everybody off guard. Bernanke speaks. Trichet speaks. Trickett, I like to call him. All right? Those are the things that he does to keep the retail traders at bay. Now, once the peak formation is put in and the new trend is underway, the reversal trend, you will see on day 2 of the cycle, the things that regular people follow will be validated. So the moving averages on the higher time frames will start to signal, right? Because he made the peak formation, he's starting to rise. So since those things lag, they take 24 to 36 hours to catch up. So if he made the peak formation in London, then the next day's U.S. session will start to show signal validation of the retail and technical traders. The 5200 might cross over on a 1 hour chart. Traditional indicators will cross over their signal line. MACD will cross the 0. The oscillation bars, OSMA, will cross at 0 line. RSI will cross the 50. CCI will have a 0 line cross, et cetera, et cetera, et cetera. What the dealer has just done is gave the opportunity for trend-following technical traders to hop on. But retail traders aren't quite sure because they wait for confirmations, break of, maybe the signal fires, but they wait for a break of the high, or they wait for a break of the signal candle, the different things that retail traders do to validate their entries. So this waiting makes the dealer push higher. By pushing higher, he validates the signals on the chart and forces the hand of the retail trader to click the mouse and to execute. It's part of the game. It's part of the cycle. That's why there's 3 days of rise, because the first day is a surprise. Everyone's like, oh shit, it went the other way. I got to change. Then you wait around. You wait for the averages to cross. When they finally cross on day 2, you're like, wow, that looks like the trend. Let me draw my lines on this wedge. And if I get a break above the wedge from yesterday's high, then I'll be in and I'll ride this trend. Boy, I'll have it. Then what happens? He forces the hand. And finally on day 3, traders are convinced that this is the real move and they're missing it. The market makers show trend acceleration and separation. That is where the vector on the last leg of the last leg comes in. You get a major separation where price comes off of the averages, right? The averages are lagging like this, and price is all the way up here, way away, and starts to turn straight up, almost as if the candles are standing on their head, on each other's candle head, all right? Then what happens? The dealer applies the brakes on day 3 like a brick wall, and all of a sudden, everything starts to flatten out. This flattening of the averages is what gives the technical traders reason to think of A, B, C, D continuation, right? Because they measure from here to here, and then they say the market has paused, and then they go, oh, it's going to go this way. That's how the people, the technical guys, validate what's happening. So now, on day 3 is reversal day, back into the cycle repeats itself. The dealer has made the 3 runs to the high over 3 days, 3 levels, 3 pushes, whatever the hell you want to call it. And he's gone sideways like the chart in Euro that I showed you. Now he puts on the brakes and runs to the high and pulls back, runs to the high and pulls back, runs to the high and pulls back. Those validate all the retail traders that are put their pendings. And when he breaks above there and holds above for a few minutes or for 14 minutes, they take positions the wrong way as a continuation trade. And then the dealer will shift that zone away from those traders and make his money back. Okay? All right. Someone's saying that my volume's bad. I'm trying. I readjusted. I turned it up. I don't want to blow you guys out, but at the same time, I want you to hear it. Good job, Fred. You see it. All right. What does separating from the movage averages mean? Okay, let me clean this up and draw it for you. And we're going to talk about averages. I'm sorry we're having so many technical issues tonight. I'm really, really sorry, guys. I am screaming at you. Noticed. All right. So look. Wait, I need to hear from the Averys. Where's the official modulators? Am I good or what? All right, look. The averages start to fan out, right? What happens is because they're lagging and price is moving so fast, right, you have the 50 will lag down here, and you'll have the intraday signal lines. All right? 5 and 13 will be here. And what happens is price is running away from the averages. So you have separation from the averages. I don't want to say angle and separation because that's from another business. But you, in fact, do have angle and separation. Okay? So what happens? Traders see this. This is the terminology for this angle and separation is called trend acceleration. It's where the trend is starting to run away and traders get afraid that they're missing at it. It's an acceleration in price. It's moving away from the averages. And everyone feels like, oh man, I'm missing it, I'm missing it. It's a ploy by the dealer to get Gloria to take it. But she knows better. She's been around me for a while. That's right, Gloria. Okay, and then what happens? They pull back, and then they go into consolidation, and the traders say, this is your chance to go A, B, C, D continuation, but the dealer never breaks the high or breaks it and comes below, and he corrects against those, and we use the averages as targets based on the numbers of where the contracts are and how the dealer comes back and triggers those stop losses. Okay? So the trend is set up generally as a 3-day cycle. First day is a surprise. Second day and third day he validates. And then late on the third day he puts on the brakes and reverses. That's it. And he gets traders caught the wrong way. All right? The reversals are used for market makers to book a profit. Think. Do you really think the broker's matching you up with some dude in China? He could care less. He's taking the other side of your trade and hoping that you haven't been in the class. Okay, what happens when the dealer makes a reset and needs to continue higher? A trend reset will be used by market makers to book profit but not reverse directions. Okay, remember what happens. Day 1, reversal. Day 2, you're long, the dealer's buying off of you. All day, buy, you sell, you buy, he sells. You buy, he sells. Day 3, acceleration, you're really buying, you're heavy. The dealer buys from you and builds his position. Now, he's been doing this for 2.5, 3 days. He needs some money. What's he going to do? He will come back down and make another formation, a W, or a stop hunt below the form of W that formed today. Euro might come down, stop hunt, and go back towards the peak formation high. The reversal or the reset is not confirmed until the dealer violates the brick wall and trades higher. And that W will become, or the top of that will become the new peak formation to trade off of. So what can happen is that 3 more days can be expected on a reset. Why? Because the cycle is set up on a 3-day cycle. So if the dealer rose for 3 days, pulls back, books a profit, resets the trend, then you can anticipate 3 more days of rise. Now, if this happens from Friday to Sunday, Monday, Tuesday, and then he rises, he resets, and then rises till the end of the week. That's the anomaly that messes everybody up and that you have to learn how to identify. But if Euro is in a sideways chop right now, and they've hit the high 3 times, will it be a reset? I don't know. Ask me tonight. If the dealer at 330 breaks high and gives me a nice M formation, that is a safety trade, and I will take it. Okay? So now, if the W that the dealer formed, if he comes out and breaks to the downside and stop hunts low, he's heading back towards the peak at a level 1. I don't want that. I don't want to take that trade. I want to wait to be sure he's reset by trading above the level 3 and using that as a new peak formation. However, if nobody falls for the reversal, the dealer can reverse back again after only 1 more level or 2 more levels of rise or fall, and that's the days you see 4 or 5 levels within a week. And the answer to that problem is that is why you use a tight stop loss and you stand aside and reevaluate where you are in the cycle. Okay? All right. Questions? 60 to 90 minutes at reset. John, I'll answer that privately. 60 to 90 minutes at reset. Please draw. Yes, all the factors of working the pattern are the same. So what happens is if the dealer has done this, right, 3 levels of rise and he hit a brick wall. Now, if you notice what happened, the dealer is in accumulation phase aggressively. Aggressive moves will be seen at level 3. He went up, came down, made a W. Now he's right about here. Now, what do I anticipate happening? Well, I know that it's Thursday going into Friday, and I know that the dealer makes a unidirectional swing. I'd like to see him stop hunt high and issue me a safety and correct back into somewhere around level 2. That would be a nice, perfect, in line with my expectation setup. But if the dealer breaks to the downside, let me change the color here. If the dealer breaks to the downside out of the Asian numbers, I am not a buyer. I don't want this. This is a scratch. No trade. I don't know that this is a reset until when? When he comes back here and does the same behavior he did yesterday and the day before, or he closes above this and rises. Then this will be the new peak formation, and we can count to 3 from here. Okay? If nobody bites and he doesn't get the money he's looking for, this could be one more day's rise. Keeping in mind that we're going into days left to do what he needs to do. Okay? All right, so now the question is, if he breaks this level of the top of level 3, how do we make the measurement? We make the measurement of projection from the stop hunt. Okay, so if the dealer has this level 3 mess where he hit the highs, hanging out, and then tonight he breaks low and rises, we measure from the low of the day to the high of the day. This just gives you a direction. The stop hunt becomes the peak. This just lets you know the direction now. Right now, level 3 behavior is seen. We're going into Friday, right? Okay. I anticipate a safety tonight. Price has been running for 3 days. I can tell you that on all the time frames, Euro is in an uptrend. That's what the retail traders see. Remember, by the 3rd day, all the stuff will be rolled over. The dealer has went into sideways chop at level 3. When there's a big rise, the market needs more guys. Well, he's waiting for them. They're piling on long because everyone is doing the ABCD, running all their fibs. Oh, Euro's never going to quit. It always goes up in December. I can go on all day of all the shit that people say. So now, the dealer has made the brick wall. If he breaks the brick wall, I have to watch if he closes back below and how he handles that if he issues an M. If he issues a W below level 3, it could be a straight drop, but you have to wait for confirmation. What's confirmation? Confirmation is back to level 3, violation of level 3 high. That's the only way to know the new direction. And then if he does that, following night, this becomes the peak. The following night will issue you a safety trade or a straight rise trade, which is the dealer getting the hell out. That's how you read that. There's no other way to read it. There's no other way to enforce or impose your beliefs on that chart. That's it. Those are the only options that you're looking at tonight. Okay? So yes, level 3 and the stop hunt back to the rise will become peak formation low, continue rise. But we're going into Friday, so you might get a rise and a correction to end the day, and then the new week brings new targets and new ideas, and we're getting closer to Christmas and people are bailing, yada, 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 all those things, right? Okay. You with me? You guys with me? Yep, some people are having ahas. I love when I see aha on the chart. I don't know if you're laughing at me or if you had a moment. Okay, let me get a sip. Okay. Once the peak is identified, the bias will be in line with the peak for 3 days. We know that. It's safe to trade V bottoms and V tops if you have clearly identified the cycle direction and the trap moves. Right? So using Euro in the back of your mind, but using the sketching of the drawing, what's the direction here? Up. We got the cycle. Now, when the next day the dealer rises after the false move week beginning, and he made that big congestion and used the gap, I now know that I can expect at least one more day of rise. Stop, hunt, low, rise. Now I have some good, solid evidence of where I am in the cycle. Now I expect the dealer to form the high of the week by Wednesday, Thursday-ish, because there is a mid-week reversal. And the dealer does exactly that. He stop, hunt, lows, rises, and late Wednesday he forms, at the time we didn't know it, but what the high of the week is. He makes the aggressive move off of there, and then Wednesday night, Wednesday night, going into Thursday. Today's Thursday, yeah, okay. He repeats the level, spikes above it, and comes back below. That's what I was just talking about. He spiked above with a set of railroad tracks and traded back into the range for an easy 50. So your trades are here, here, and safe at a level 1. If you're not sure, no trade. If it's not clean, no trade. Okay? This is a unidirectional trade from here to here. It's only one way, up. This can be traded both ways. This would be, instead of a VW, it would be a BW. You can trade it both ways. Level 3 can be traded both ways when you understand where you are, but right now it's a unidirectional reversal. You're looking for shorts off of the high. Understand? That's the bias. Now, the dealer breaks here, goes into consolidation. I know what to expect tomorrow. This is my high of the week. And I anticipate and expect a straight drop or a safety trade, which is a violation of the Asian numbers, and into a free fall to possibly end the week maybe with little to no net change, or somewhere in level 2. Right? That's the moves. That's what the setup is. That's how to identify the dealer trend. Okay? We can draw it all day. False move week beginning, cycle sets, new trend is underway. I expect this, right? I expect this, and then I expect this. A topping out pattern and a reversal. Saw this coming a mile away as a safety trade or as a straightaway. That's the anticipated move out of level 1. W and level 1 are unidirectional in nature. That's it. It can only be traded one way. If the dealer does some garbage like this too and comes back down, do not short this, because you're trading back towards the peak formation. That is a no-no. Okay? You can tell I got kids now. You're looking for a repeat of the level and a reversal like he did in Euro. And if he does that, you got him. If he breaks the level and closes below and does not come back above, next level drop is warranted. But if he passes it, you expect him to come back above because he has fished for those orders and grabbed them down there and reverse back into the range. Understand? That's how you analyze the dealer cycles. Okay, so this is the sketch, and this is another reality. Look at what happened. Here's the pattern. This is intraday, right? Rise, the dealer goes into consolidation, ends the day. What does he give you? A perfect safety trade right below the Asian numbers as a gift for Christmas. Stop, hunt low, rise, we anticipate. Accumulate, end the day, top side, back into consolidation again, right? Accumulates again. He slightly violates the Asian numbers on a hammer, and we expect him to rise. What's the next move? The reversal is imminent. Notice how the pins are trapping. Notice, let me clean this. Count the levels in here for me, baby. 1, 2, 3. Remember how this works. Level 1, the dealer's involved. Level 2 is usually smaller. Level 2 is usually smaller. Why? Absent of market maker support, he wants to see how the book and how the order flow comes into his desk and where he's at. The aggressive move is started by the market maker. He then lets it alone for a few minutes, sees where he's at, analyzes his book, hits the stops, rise, right? Change the stops to the top side trap, the hand above level 3. This is a 33 trade again. There's my hand. That looks like a chicken. That was really bad. It's like a sunny chicken. Okay, look. My lines are off a little bit. 1, 2. Absent of market maker support, hit the stops high, hit the stops low, relieve the pressure. Hit the stops high, hit the stops low, relieve the pressure. Push. And by the way, there's your little 3 pushes to the high in there, right? He hits the stops low, he pushes once, he pushes twice, and there's your little ping to the top side, right above the previous high, closes back below, issues a hammer. The reversal is imminent. It's coming, baby. You are a seller against the retail trader's trend that is up. Okay? Identifying where you are in the count will always help you project the next move. If you see 3 levels like that, you know on the 3rd day he rose again. And when you hit 3 intraday levels over 3 levels of rise over 3 days, you got him. You're a short trader against the long and a long trader against the shorts. If a double peak formation appears on a higher time frame, lights out. And what I mean by a double peak formation is where the dealer repeats the level over the period of 2 days. It's a double peak formation. He goes low on Monday, comes back, works it. Tuesday U.S. session comes back. That is a lock. You own them. You own the dealer. Okay? And then level 1 consolidation, unidirectional. This can only be traded AFP, away from peak. All right? Another example from a while ago, but it's the same stuff. SSDD, man. Look, the daily chart, the dealer has hit the high back from November. It's kind of funny. This was last year. The same stuff shows up. Look, he hit it again, and he hit it again on the daily. Okay? Brick wall. Why can't he go higher? Why can't the dealer go higher? What's wrong with him? He doesn't want to. There's money up there that he doesn't want in his pocket. It would be a disturbance for him to his book. He would allow some amount of money to flow into his account, and he doesn't want it. Okay? 4-hour chart, same thing. November high. Okay? Look how he pins to that high and pulls off of it. He dropped. He went back up, pins to the high, pins to the high. Reversal is imminent. You scale it down. Just check this out now. I'm showing you daily. I'm showing you the 4-hour. Now here's the double tracer. False move weak beginning. Forms the low. He runs up. Okay. 1, 2, and the 3rd level in TDI is divergent. He runs to the high and he works it. Midweek reversal. Monday, Tuesday, Wednesday. He repeats the level on Thursday, and he gets the hell out of there to end the week. And that's how that played out. Don't you see how the bigger scheme of things all fits together with the dealer cycle that I'm showing you? The 1-hour, 4-hour, daily are all brick walled at the high. You scale down to the 1 hour and take it another step further at how the dealer worked off the high. And in Asia, he rolled over. He did not repeat the level because the chart is blocked out over here. But on the 1-hour chart, you see a multi-session M formation. Okay? You see that? All the cycles coming together from all the way down from the daily, the 4-hour, the 15-minute, the 1 hour, all of it coming together but issuing the same patterns. Okay, if you look at the 15-minute from the previous day, he peaked below the 4-hour, and then he went level 1, straight rise out of there. Straight rise as an aggressive move to get away, and then put the brakes on and reverse. But how did I know that was coming? Because the brick wall is in place for months. The November high holds in February. These are the things you have to start to understand. And then the clues are how those big, long stop hunt entrapment candles, pins, if you will, right, reach out and grab the orders. Picture the hand reaching above a level and grabbing it, reaching above a level and grabbing it and working it. And that's an opportunity for you to go short. Okay? All right, a few more slides and then we'll hit the break. I'm hungry too tonight. I'm gonna microwave some Diet Coke and drink it like tea. All right. The anticipated directional move lines up with the peak formation. That's part of the intraday trend, all right? What the hell are you talking about, Steve? The projected intraday move lines up with the peak. I'm thinking this is my bias. I need this to validate that and fulfill it. It begins after the stop hunt. After the dealer makes the stop hunt, vector candles, I need this to roll over and be in line with my bias if I got a peak formation down here. Here's my intraday peak. Here's my weekly low of the week peak. The trend move is slow and steady. I want you to realize something about Forex. When the dealer has his money, all of it, the price action is slow and methodical and just seems relentless. When the price is moving fast and aggressively, that is done on low dollar volume by the dealer, and it appears as a flash, a spike, or a quick move out of nowhere. All right? Obviously, if the peak formation or midweek reversal is identified, the trade will offer you more pips and can be converted as a swing trade. You know how I joked around in the sales meeting about, oh, you catch something, it's going pretty good, and all of a sudden you're a swing trader? Okay, well, I'm telling you how to convert spots to swing. If you take a trade and you ride it for the entire day and the dealer goes into level 1 consolidation and you look at the chart and analyze, man, I realize now before I click out of this trade that there was the false move week beginning. I see the peak, or this is a 22 situation on a Tuesday, Wednesday. I expect the dealer to rise till Thursday night and correct off of that Friday morning. Now you can take that trade and move it into from a spot to a swing. When you do that, you have to handle your stop loss accordingly. And another note is, will all time frames line up? A lot of you get caught on, oh, this time frame lines up with that. I showed you one where they all stalled, but all of them were in an uptrend in that example. But what I want you to understand about trying to line up time frames is that it is a retail trader's trap, and I'm teaching you how not to get caught by the market maker. When all that shit rolls over and the 1 hour's up, the 4 hours up, the daily's up, you need to start thinking reversal time, baby. The dealer is going to do something. He lined up those time frames, and I got to be ready to go opposite of that, like a market maker. Just have an open mind and trade in both directions. And the biases, getting locked in a bias is a problem. All right? So, how would you label, if you had to put a label on it, how would you label a market maker trend? You would label it as WVVM, okay? And it would look like this. This is V1, and this is V2. I didn't know how to do an exponential on the slide on PowerPoint, so I have to draw it for you. Well, actually, my wife didn't. Anyway, look, the W being the peak formation, right? Level 1, level 2, level 3 is the M reversal. Counter trend is ill-advised at V1. That's it. Okay, here is an example. False move week beginning, the dealer corrects. There's the W formation, the blue tracer, Sunday, double spacers. Dealer rise, we expect stop hunt low as a safety trade. Rise, stop hunt low, rise. Notice how something interesting about the setup. The dealer went up and he appeared to be in level 3, but he issued one more stop hunt low back towards the high and failed to break it. So you have 1, 2, and it's like not exactly a rise, but he gave me a clean stop hunt and pushed to the high, and then he put the brakes on. So on the third day, he essentially extended this level, but then he started to reverse. There's railroad tracks to the high. The next night, stop hunt high, safety. And then a major correction against the cycle that was going up. Okay? A major correction against the cycle to end the week below where it started. But man, he enticed them to go in, all in, and then he punished them by a stop hunt high. Notice the pins at the top side. Okay? Again, enticed them, took their money away. Good stuff. Good stuff. All right. Downtrend, same exact thing. It could be labeled as MAAW. And again, A1 is ill-advised. M being peak formation in this example, and W being level 3. Okay? So that's this cycle. M, 1, 2, 3. W reversal, back into the range. Right? It's ill-advised at A, this pattern, this A pattern, A1. It's ill-advised to trade back towards the peak. Don't trade this way on A1. That is level 1. Never trade against the peak formation coming out of level 1 consolidation. Say it. All right. Don't trade back. So this is how you label the dealer cycles. MAAW, A1 ill-advised, W, VVM, ill-advised at V1. Okay? When I'm telling you with the A's and the V's, is that it is okay to trade V bottoms and A tops when you know where the peak is. Okay, Steve, what about the second leg? I prefer the second leg. But if I have structure, remember yesterday I have structure. If I have structure in the cycle, I know the direction. It is okay to take A1 to the downside and V1 to the upside if I have structure, because that is, my friend, a safety trade. Okay? Here is a picture of that. False move week beginning. Dealer makes the break to the high side, puts on the brick wall for me, and actually hits it 3 times. He hits it here, here, and then stop hunts here at the session open. Corrects big. 1, 2, 3 to the low, pulls back into consolidation. Stop hunt high, drop. Stop hunt high, drop, hit it, put on the brake, start to reel it in. Level 3 becomes level 1 reversal back into about level 2 to end the week. Okay? You guys see that? It's beautiful. That's Lisa's cousin. Winona Lisa. For all you country fans out there. All right. Said that already? I don't know how that chart is in their slide. Okay. All right. We'll break here. We'll talk about the structures that candlesticks make. We'll take a few tests. Run to about 9:30, and I'll let Jim take over for tonight. Let's each